just talk about HDFC Bank. And this is a counter that hasn't moved too much over the last 1 week. But if you look at the month that has gone by, or rather the last 30 days or so, it's gained, well, close to 10%. And that's quite a big move for the HDFC Bank. But the reason we're talking about this is an NDTV Profit exclusive. HDFC Bank has concluded its first debt sale after its merger with HDFC yesterday, and the bank raised over 7,400 crore rupees via a 10-year infrastructure bond. Mimansa has more details, and this is, by the way, an exclusive update that Mimansa has picked up. Mimansa, the reason for the issue and also the context for the issue right now?
Yeah, hi, good morning, Alex. So HDFC Bank has raised rupees 7,425 crore through infrastructure bonds at the coupon rate of 7.71%, a little short of what the lender had originally expected to raise. The bank had aimed to raise up to 10,000 crore rupees initially, out of which 5,000 crore rupees was under the green shoe option. But the bank's first debt sale after the merger with HDFC Limited received 75 bids worth 8,700 crore rupees. So it looks like the banks are optimistic on the possibility of an oversubscription to the issue. But even though macroeconomic conditions currently are favorable in terms of pricing, it is not something that is enticing the investors as much. As a result, some banks are unable to raise the entire amount. So experts at NDTV Profit spoke with us saying that investors want higher yields and the issuers want aggressive pricing. So because the debt market is now flush with several corporates and banks who are tapping the corporate bond market, investors are rather cherry picking. So they are going after a bond issue which is safer, liquid, and also gives higher returns, which are usually the ones by the quasi sovereign entities like NABARD and IRFC and more such. So investors are weighing all the risks and returns from the options that they have before making a decision. And for the issuer, it is probably the best time to tap the corporate bond market, considering that the US Federal Reserve has indicated that they are not going to, they're rather going to cut rates in 2024. Also, the RBI's move to increase the credit risk weight on consumer credit has funneled down the capital raising channels for banks. So they have to now move to other avenues to raise funds. But if we talk about the HDFC Bank per se, the fundraise is crucial because they have to now replace the borrowing by HDFC Limited, and it is expected that they are going to continue tapping the corporate bond market in the coming days ahead. But how the response is going to be from the investors, that is something that we'll have to wait and watch, which might be lukewarm in the coming days.